understand where the markets are headed and what the texture could be for the week to come, given that we have the monthly Nifty as well as Sensex expiry ahead of us. And to make better sense of that, we have Mr. Dharmesh Shah, Head of Technical at ICICI Direct, joining us on the show. Dharmesh, hi, afternoon, and thanks so much for your time. Give us your sense on where you're seeing the market headed from here. 26,000 seems like something that we've held on to solidly for now. But what lies ahead, given that you have the monthly expiries ahead this week?
Hi, good afternoon. Yes, definitely. If you look at the market, I think so for the last few trading sessions, we have been struggling near the live high, which is around 26,300. But what we do, I think so, market seems to be, I think so, facing some bit of a selling pressure near this psychological level of around 26,000. Expect, I think so, market to find a strong support in this range of 25,600 to 800, being a 50-day moving average and also the 50% retracement of this entire fall of this entire rally. So 25,600 to 25,800 will act as a strong support. Look at the key point to highlight is that if you look at for the last 2 weeks, I think so Indian market has been relatively outperforming the global markets. If you look at the US market, they have corrected almost 6%, or even European markets have been down by 5%. But at the same time, in this period, we have been outperforming by 3.5% on the higher side. So in terms of relative outperformance, yes, definitely India has been outperforming. Yeah, definitely the main pain is in the small cap. I think so that is something hurting the portfolios of all of us. But yes, we again believe, I think so, that the small cap is at the very strong support, which is that 200-day exponential moving average at also on the weekly 52-week EMA, which has acted as a very strong support in the previous history. So we expect, I think, small cap to find a strong support in this range of 17,800 to 7,500, and expecting a some bit of a stability at the current level. So not too much negative for the market, but yeah, definitely it's something a buy on dips market where large caps will clearly outperform the mid caps in the near term.
All right. Hi, Dharmesh. Thank you so much. This is Ankita also joining in. Dharmesh, amid this market, where you clearly mentioned that right now we are outperforming the global markets, and there is a bit of a cool off that we see coming in as far as the Wall Street is also concerned. What would be your sectoral bets? So what are the pockets where you see value at this juncture?
So if you look at the market, I think so Bank Nifty has been clearly outperforming even in this current corrective phase. So yes, definitely banking remains to be a top pick among the all. I think so BFSI can be look banking can be look for a target of around 60,000 to 60,500 as far as Bank Nifty is concerned. Apart from Bank Nifty, again I think so the sectors which we like is auto space as a whole, where we remain to be positive for. IT again I think so the we believe the worst seems to be getting over for IT. Maybe IT can see some bit of a consolidation, but after the last week sharp up move of 3% on the IT index, we expect I think so IT to see better, and I think so any positive outcome on India US trade deal can further trigger the fuel for the market for the IT index. So yeah, IT is something which we like from the current levels. Apart from IT, BFSI, auto, and capital goods as a space, I think so, which has been underperformer for a long, long time, expecting the outperformance in the Q2. So yes, definitely overall, I think so. It's a buy on dips market where again I would say that there will be a volatility, and such volatility always gives you a better opportunity to create the portfolio and from the medium term perspective.
Okay, and on that note, Dharmesh, what are some stock specific ideas that you're liking? If you could share anything with our viewers this afternoon?
Yes, definitely. I think so. As I said, that the banking remains to be a top pick. Where instead the banking PSU banks are something which are relatively outperforming. If you look at the PSU bank index, I think so. I think so. The coming out of 16 months of long consolidation breakout augurs well for the long term uptrend for the PSU bank index. Among the PSU banking index, I think so. Union Bank remains to be a top pick. The stock seems to be forming a cup and handle pattern and supported by strong sets of volume, and 1.5 year of a long consolidation breakout seems to be panning out for Union Bank. So at 152, we look for a target of around 168, giving a stop loss of 138. Apart from Union Bank, Adani Port is something which we like at the current market price, where again, same pattern, cup and handle pattern, last 1.5 year. If you look, the stock has seen done nothing. It's been consolidating in this range of 1,000 to 1,500, expecting a breakout above 1,500 and look for a target of around 1,675, keeping a stop loss of 1,375.
All right, Dharmesh, on that note, thank you so much for giving us your picks. We'll let you go on that note. And